Hi everybody, Brian from Bearable Traders here. It's February 3rd, the weekend. Hope everyone's having a good one so far. This, of course, the weekend video. We'll go through what happened last week in the markets, and there certainly was a lot of interesting stuff that happened to move the markets around. And then we'll take a look ahead next week. We'll look at some trading opportunities, and as we continue on through earnings season. So let's get down to it. All right, so a quick review of what happened last week. Lots of stuff to digest. We had Microsoft, we had Google, we had AMD early in the week. All of those companies reported some decent numbers, but sold off on them, I guess. Maybe a little bit too much optimism in the market. Maybe a few little disappointments here and there. But then Fed Powell came along on Wednesday. They basically announced that there would be no change in rates on Wednesday, which was absolutely no surprise to anybody. But then he kind of poured a little bit of cold water on the idea that they were ready to start aggressively cutting rates in March, which was, I think, sort of shared belief by a lot of investors and traders. So markets, and especially I think the algos really kicked in after that comment was made and really sold the markets off on Wednesday afternoon. But they came, not to worry, they came back on Thursday, and then Thursday night, Meta really just blew away all the expectations and their numbers, up 14% after hours. And of course, that brought some optimism back to the market. And then Friday morning, we got the employment data. And again, it blew away the numbers too, surprised everyone with the strength in the jobs market, the payrolls, and wage growth, which was pretty much almost twice what everyone had expected. So that put a little bit of pall in the market, but not to worry. The buying brigade came back in again on Friday morning after the little bit of a sell-off, and bad news became good news, and the market really rallied Friday. So we ended up all green on the indexes, except for the IWM, which continues to struggle. And it's just not making the same kind of headway as the tech-heavy QQQs and SPY. Even the Dow managed a really good gain on the week. What was good in terms of sectors, consumer discretionary and staples. Now, that's not a combination you see very often. Both discretionaries, which are, I guess, sort of a bullish economy type sector, and staples, which is a bearish economy type sector. So both of them were the biggest gainers on the week. Energy, again, continues to struggle. Biggest loser on the week, despite all the hubbub and chaos that continues in the Middle East. Treasury yields, pretty much unchanged, as you can see on the 2-year. The 10-year did dip a bit there, coming back down to just about 4%. U.S. dollar up on the week. And Bitcoin came back a little bit this week. It seems to be bouncing up and down, sort of between this 43,000 level and 41,000 levels for the time being. And I guess we'll see if it kind of picks a direction at some point there. But that was your week, and it was quite the week. All right. And as always, before we start looking at some charts here, I'd like to do a quick plug for my books on Amazon. There they are there, brand new one, How to Trade Options. How to Swing Trade and Profiting as an Active Trader. So you can check all of those books out on Amazon.com or Amazon.ca, wherever you happen to be in the world. My earliest one, How to Swing Trade. My most recent one, How to Trade Options. Audio version not available quite yet. It should be available in a week or so after they review it. And my Profiting as an Active Trader book. So there you go. Now let's get down and look at some charts. And as always, when we start out, I'd like to look at the treasuries. And you can see here, the 2-year, we've really been stuck in a pretty narrow range for more than a month now. We've really gone nowhere, or more than a month. So we've gone nowhere with the 2-year, kind of just hanging out there, just over 4%. And 10-year, a little more volatile, but you can see here we're kind of settling into this range right now, somewhere around 4%. And I guess the market's just kind of waiting for the Fed to do something here in terms of when we can expect them to start cutting rates. But a lot of the consensus now sort of revolves around maybe later in the year, as opposed to what people were thinking when you looked at the Fed Watch tool, they were thinking, oh, maybe even January, definitely March. But it seemed like Fed Powell took that that March rate cut really put that into question. Really waiting for more data is apparently what they're doing, which is probably a wise thing. The economy seems to be doing pretty well, and with the rates where they are, so why take a chance of cutting rates and then reigniting inflation? So I think that's kind of where their thinking is. Transports had a pretty decent couple of days here after the big flush Wednesday on Fed comments, and you're going to see that in most of the charts here. And then we sort of came back and recaptured everything on Thursday, Friday. I guess the thinking was, well, maybe good news on the economy and employment is actually good news for the market. So had a move back up there. Again, you can see here kind of an indecision candle on the week on the transports in terms of the weekly. We get into the Dow. Dow here just again breaking into an all-time high, pulled back on Friday after that big run, and again new all-time high. But you can see here on the weekly, we just keep pushing higher and higher. We're really getting extended. Volume's pretty good. So I just it's just, I think it's taking everybody a little bit by surprise how strong the market is, but it's got to start pulling back at some point here, and I'm thinking maybe next week might get a bit of a pullback, but we'll see what the earnings tell us as we get lots more numbers rolling in here. Here's your Qs, basically back at all this all-time high that we made at the end of January. Again, just sort of bouncing back, pretty decent volume too on this buyback here. Again, the tech sector kind of showing its strength, leading the way here. And all the indicators showing pretty overbought. Stochastics are up. RSI up over 70. So again, pretty extended, but this market just, the buyers just keep coming in. Again, same sort of comments on the SPY. You can see this big drop Wednesday. Fed comments, and then Thursday, Friday, we just pushed right back up to all-time highs. Let the party continue. Here we go. And as we go, we pushed higher on volume. So lots of people really optimistic, market participants. Here's a different story, the IWM, which just seems to, small caps, which just seems to be struggling along here. Sort of stuck mid-range between sort of 190 and this 200 level right now. Again, some concern about interest rates and them staying higher for longer, and a lot of these companies aren't making money and depending on the debt markets to keep themselves going. And there's what the IWM looks like on a week, pretty much an indecision candle. We got a bounce up to 200, pretty clean rejection. Almost got down to 190 here and then came back up. So real indecision candle on the IWM. People still trying to figure out if it should go higher or not. The VIX, again, continues to be very low. No fear in the market of a big sell-off coming. The dollar really showing some strength here as we as we move through the months of the year. Early part of the year here, we're showing some strength. We had a pretty significant gap fill. On Friday, we got back up through this gap that we made. So we'll see if we can continue higher here. But this obviously not necessarily great for emerging markets, not necessarily great for commodities when the dollar is strong. And here we are. we broke this trend, and now we're heading back up, and pretty decent volume on the week as well for the UUP. Bitcoin seems to be stuck in a range for the last 4 or 5 days on a weekly basis. Just again, we're kind of range bound here, and I'm not sure. It's sort of undecided as to whether we're going to continue to break out. Certainly the trend is your friend here. You can see here we're making a series of higher lows on these pullbacks, and so bias to the upside, but volume pretty light. So we'll see where Bitcoin goes, but there's your levels to watch: 45,000, and if we break and hold below 40,000, we'll give you an indication of where we may be going. So let's take a look at some stuff I am watching or have been watching over the last week. Apple was one of those ones that reported had some negative some negative reaction to their earnings release. But you can see here what happened on Friday. It just came ripping back. I was just astonished at the, how it's gapped up or gapped down so much and then came right back up. Interestingly, earnings report on Apple, they actually mentioned AI, which was the first time. They mentioned AI, and they had some stuff to say about some coming initiatives, and that I expect to hear about those in the formal announcement. There's some event in June, I think, that Apple has an opportunity to make some mention of those, so that will be something to watch for. But I'm guessing that one might have been an AI bounce. A firm I've been in a position on, I had some 35 puts, basically just bought the puts thinking it was going to roll over. It did. I've covered all of them because a firm's going to report this week, and I don't want to be holding those puts through earnings report. And it did break down through the 40 level, which is what I was looking for. So I just sold those puts, and now I'm flat and waiting to see what they're going to say on earnings. I'm a little bit concerned they'll have some positive stuff to say, and so that's why I'm sort of cutting out on it right now. AMD reported this week. I sold some 150 puts prior to the news release, which is something I don't normally do. I don't usually play earnings, but I just thought AMD has just been so strong. It's got that AI bid. I just thought 150 was so far out of the money. I mean, it was trading around 177 when I sold the puts. I actually sold them naked, and my thinking was, there's just no way it was going to get down to 150. It was just way too far. It did drop quite a bit. It came down just about to 160, but I was still $10 to the good, and I got a decent premium on it. I got over 50 cents, so that's why I took it, just because the premium was so rich on this, and I just thought it was a really safe bet. And, even if it did drop below 150, I was even thinking I'd be prepared to own them, because that would have happened if it had dropped below 150, where I sold my puts. I would have been, if I'd have let them expire, I would have owned the shares at that 150 level. So I was even prepared to own the shares around 150. So as it turns out, they expired worthless, and that was it. So if you want more information on some stuff that trading options, obviously I've got my book out, kind of explain how you can take advantage of some of these levels, because you can see here that was a great level for a AMD put short, because that was probably a pretty significant area of support as well. American Express, this was one I was looking at. I was thinking of doing an after earnings call sale, which is another trade I do. It's outlined in my book, How to Trade Options. I was going to sell some calls up here based on this first candle, but then I tend to like to wait a couple days to make sure that I'm not going to be going against a trend, and I'm glad I did, because you can see here I would have sold probably something around 205, and I would have ended up short those shares if I'd have held short the shares if I'd have shorted calls up here. So I'm glad I just waited, and I just didn't see any weakness, so I thought, no, it's not a good trade. So it looks like 200 is pretty solid support on AXP, so maybe that even could be an opportunity to sell some puts there. BA I'm still long this 240 260 call spread. The ones I'm short are doing better than the ones I'm long, but still holding on to those. Those don't expire till August, so I'm kind of holding on to those, seeing where they go. There's very little time decay on them right now. Google, again, sold off pretty hard. Really came bouncing back hard on Friday, and got long some shares on Friday. So we'll see where it goes, but I'm looking for it to at least maybe come back up and to this sort of 147 area. IWM, or IBM, I should say. Again, this is stock I played. I shorted some calls after this big spike up. This was more of a typical, I felt better about shorting the calls here, so I actually did short some 195 calls, and they expired worthless this week. So good with that one. And yeah, it could be another reload on this, but it does look sort of in no man's land right now. And there's probably not a lot of volatility in the options because earnings have passed. Intel looks like it's kind of found a bottom here. Again, reported earnings, big drop, disappointment. We've come back down to a level that's kind of interesting here. If we can hold 42, I might be looking at Intel. Meta was the one who really just blew the doors off on their numbers. Again, just keeping an eye on that right now. Look at the volume on this thing too. Wow. Again, we'll be watching for a top on this, but I'm going to wait for a couple days to let things settle out there. Netflix looks like a little toppy here. 580 could be an area where you could sell some calls, but it definitely looks like it's kind of settling into this 565 range here. Qualcomm, another one that's really sold off after earnings. Take a look at that for possible rebound. Or put sale down around 135 if the premiums are good. Tesla's looks like it might have put in a double bottom. I have some 180 puts a couple of 180 puts that I just bought puts thinking it was going to fail, and it actually was looking pretty good on Friday until the markets came roaring back. But I've got those, and we'll see how they do Monday, Tuesday. If Tesla looks like it has put in a double bottom and doesn't keep rolling over here, I might end up having to bail on those puts at a loss. So I kind of thought maybe we could get down into this 175 area, but it may be sort of the selling is kind of overdone right now. We may get a bounce on Tesla. So stochastics still look like they could go lower. MACD is heading down. RSI is kind of hooking back up a bit there. So again, we'll see how it does Monday, Tuesday. And I'll either hold on to that position or I'll cut it for what will probably be a loss. So that's it for my trades and past trades and future trades. So yeah, let's move on and close things out here. All right, so let's wrap things up here with a look ahead, February the 5th, high level view. Here's your indexes right now with some various support and resistance levels. As far as economics events coming up this week, you get some U.S. S&P's ISM and PMI services stuff on Monday. We've got a lot of Fed speakers coming up this week. Tuesday, chalk and block full. Wednesday, more Fed speakers. I think even Friday we've got some Fed speakers as well. Might add a little bit of volatility, little spice to the market. We got consumer credit at 3 on Wednesday. That'll be kind of interesting as well. As far as earnings go, we are still in the middle of earnings season, so some interesting stuff coming up here. Palantir, everybody likes to watch that. Snap, Spotify, Uber and Baba. On Wednesday, ARM, another AI play there. That'll be interesting to see what they come up with. PayPal, and then as we get into Thursday, Pins, Affirm, and then some consumers on Friday, Pepsi, and of course Enbridge Energy Company. So could be another interesting and crazy week. So that's it, everybody. Hope you're having a great weekend, as I said, and yeah, come and join us 8 o'clock. Live on YouTube. Monday morning, we'll be kicking off with our regular pre-market show and then trading the market open at 9:30 with our members. So have a great rest of the weekend, and we will hopefully see you on Monday. Bye for now.